Hello, and welcome to NASDAQ Investment. This analysis is for space exploration technologies on NASDAQ as of 7th of August 2026 with a share price of $114. The full report is on donartsian.ca, a hold at $114.92 across every horizon, an elite franchise at a genuinely extreme price. With no buy anywhere, I've paused it as an active pick, visible and reversible on the next buy. Start with what is genuinely rare. SpaceX carries the majority of the world's payloads to orbit, and reusability gives it a cost advantage no rival has matched, the strongest competitive moat I score at 78 out of 100. Starlink serves roughly 10 million subscribers, and there is a contracted deal for Google to pay around $920 million a month for AI compute. The first ever quarterly print on the 4th of August beat revenue of $7.81 billion, up 92% year on year, with a loss per share of 9 cents well ahead of the 22-cent estimate. On quality, the company scores 68, held down only by deep losses and heavy cash burn, not by any weakness in the franchise. The IPO changed the financial picture. Cash went from $24.7 billion to about $93.5 billion, roughly $100 billion including marketable securities, on around $86 billion of proceeds, and the current ratio jumped from 1.22 to 5.1. That downgraded the financial distress flag to a sizing caution. Two honest cautions, though, that roughly $100 billion is cash sitting on the balance sheet. It is not a revenue run rate, and the market capitalization only makes sense against the real share count of about 13.18 billion shares, roughly a $1.51 trillion company, not the far smaller share count some feeds still show. Here is where it breaks down. The stock trades at about 66 times sales and roughly 63 times enterprise value to revenue, with no free cash flow and about $18.4 billion of capital spending every quarter. Valuation scores 24 out of 100. The multiple only looks reasonable if you credit revenue roughly tripling over the next 2+ years, much of it from the newly consolidated compute and social lines rather than the proven core. On a disciplined read of 2027 sales, fair value is roughly $85 to $100, below today's $114.92. You are paying a full price for a flawless future, which is why the valuation ceiling gate caps every horizon at hold. The balance of risk is loud. First, valuation itself. At about 66 times sales, the valuation ceiling gate is triggered, so there is no margin for a stumble. Second, supply. The staggered lockup began on the 6th of August and can release up to 911.5 million shares, around $123 billion of stock, onto the float over time. Third, this is a newly public four-part conglomerate with a thin disclosure history and freshly consolidated XAI and X lines, so transparency is limited. Fourth, the $60 billion all-stock Cursor deal adds more dilution, and the SpaceX-Tesla merger is only a rumor, optionality that could crystallize either way. In the bear case, the stock breaks its low towards $70, about 39% below today. This is a hold you watch closely, not a buy on the dip. Now weigh the risk against the reward. The bull case is roughly 96% above today, the base case, the most likely, about 4%, and the bear case a fall of about 39%. So you are risking about 39 to make 96. So, our call on space exploration technologies on NASDAQ, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by donartsian Investment at donartsian.ca. The link to the full report is in the notes below. Have a great day.